Well, joining me now from UBS is the Global Head of Emerging Markets Fixed Income FX, Bhanu Baweja. Welcome. Thank you very much indeed for joining us this morning.
Thanks for having me.
Does it look as if this is now inevitable, that Japan keeps talking about intervening in the currency markets? Is it going to have to do it at some point?
I don't think it's imminent. I mean, if you go by the S&B, then it's certainly not very effective either. I think the Bank of Japan can do much more to try and stimulate the economy before they actively intervene in the markets. It's not clear to me that within the DPJ there is tremendous consensus that intervention is indeed effective. Japan's own experience has been pretty sketchy. If you look at their intervention policies from 2003 onwards, 2005, didn't really bear fruit. Right? Intervention typically is effective when it's joint intervention with major central banks really backing you. The probability of ECB buying euro and selling yen, the probability of the Fed buying dollars and selling yen, I really should say the ministries of finance or the departments of treasuries in these countries, because they run the show, is low in my opinion, which means that BOJ and the Ministry of Finance in Japan will probably have to do it alone. I don't think it's going to be very effective, so I'm not sure that intervention is imminent at all.
So, well, we saw this sort of shot in the arm stimulus today, 11 billion. Is that the kind of thing that you think is going to continue then?
Well, Japan needs structural reform. Japan needs to reduce its debt. Japan needs to stimulate its domestic demand. Whether it's going to come through long-term structural reform of the labour market or whether it's going to come through fiscal stimulus is the question. But intervention is probably not the answer. Right? If we do see political risk rising in Japan, which is possible in the near term, people have been speaking about the possible breakup of the DPJ.
Yes.
That could lead to the yen weakening. So you might, in a sort of a strange fashion, might get the yen to weaken, but I think that would be temporary.
Now, we've seen what's happened in China today, another record trade surplus. Is it likely that we're going to see any kind of strengthening of the yuan, and what effect would that have?
It's a political question. The renminbi is undervalued. The renminbi should have, if it traded on market fundamentals, appreciated a long time back. But since the pressure has increased from the US, there is greater pressure on China to react. We do think that the renminbi is going to appreciate, but it's not going to appreciate by 30–40%. It is going to appreciate by 4%, we think, towards the next 6 months, and by about 6 to 8% over a 12-month period. But it is definitely going to appreciate both against the dollar and against the trade-weighted basket. There's a lot of talk about the renminbi trading against a basket, but really the dollar axis is the key axis, right? I think they can move to a real effective exchange rate basket in about 5 to 10 years, but that's a long way away. The main axis remains US dollar, and against that we do think, because of political pressure, and certainly economic pressure, that was always there, but increased political pressure, that China has to let its currency appreciate by a measure of 4 to 6% in the next 6 months.
If it does that, what effect will that have on the yen? Could you see that actually helping to weaken the yen? Well,
I personally believe that trade elasticities to price, which means the currency, are much lower than trade elasticities to income, which basically is a fancy way of saying that growth matters more than the price of the currency. Right? And mind you, I'm speaking about a 4% appreciation or a 6% appreciation in the renminbi, which isn't much. So it's not going to change the whole world. But yes, it's going to be beneficial incrementally. And the reason it's important is because Asia is a much bigger and growing partner for Japan compared to, say, the US or Europe. So the place where the Japanese yen is, in fact, very, very expensive against is, in fact, Asia. So that's why if Asia were to let its currency appreciate, China was to let its currency appreciate, and Asia was to follow, it will help. But I'm not sure that it'll fix Japan's problem.
Now, there was a story out just today talking about how Russia and China are going to trade their currencies against each other, effectively actually cutting out the dollar. Is that something we're going to see more of?
Yes, I think you are. But this is not news in that China had already said in April that they would try to do this with quite a few places. They are instating swap agreements with many countries, most of them, incidentally, producers of primary goods and energy. So what China is trying to do is to try and limit the volatility of the price it pays for energy, and obviously betraying a certain lack of confidence in the US dollar. Does this mean China is going to open up its capital account anytime soon? Absolutely not. This is a current account transaction. They're trying to invoice in currencies other than the US dollar. And I think Russia has already made the point that they want to move in the same direction. So yes, it is an incremental step away from the US dollar, but would something like this really challenge the domination of the US dollar as the world's reserve currency? No, not really. That's a stretch.
Just one final question on the yen. While most currency traders that we talk to, they don't like the US dollar for all the reasons that we know about, the macroeconomic reasons. They're not convinced about the euro either. While there's such feeling about the euro and the dollar, it's very hard to see why people wouldn't go and put their money in the yen.
In the yen, yes,
yeah.
That's absolutely right. And in fact, the yen has been the best performing G3 currency. The yen also is quite a schizophrenic currency in that you think the Japanese economy is weakening and the yen should weaken on the back of that. It reacts completely the opposite way because it is a major capital exporter. When the news is bad, in fact, people bring money back to Japan, and so it appreciates. Also true for emerging markets. People are putting their money there compared to euro or dollar.
Okay. Thank you very much indeed for joining us this morning, Bhanu Baweja. Thank you.